Welcome to my channel. Today's topic is Bank Reconciliation Statement Introduction.
Cashbook is maintained by us. Passbook is maintained by the banker, that is our account, which is also known as customer account, is maintained by the bank. Bank updates passbook in our account. Bank reconciliation statement means reconciling the difference in cashbook and passbook. So if there is any difference in cashbook and passbook, it will be reconciled. There are so many reasons for the passbook and cashbook for not agreeing. These are check received from a customer or debtor but not presented for payment, or presented for payment but the bank records only after the check is cleared. This could be one of the reasons. Supposing we receive check from Mr. X. So Mr. X bank is HDFC, that is Mr. X has got his account opened in HDFC bank. Now the check which we received from Mr. X is presented to our bank. Our bank is SBI Bank. So SBI Bank now presents the check to the customer bank HDFC. The HDFC Bank, after verifying his account, agrees and clears the check. The whole process takes some time. This could be the reason for the differences in balance as per cashbook and passbook. Checks issued to our creditor or supplier. They are entered in cashbook, but our bank makes entry only when the creditor presents a check to our bank for clearance. For example, we issue checks to our creditors. Now, our creditor will go and present the check to his bank HDFC. Now this HDFC bank will present the check to our bank SBI. This whole process takes some time. So this could also be one of the reasons for the differences in cashbook and passbook. Here, SBI Bank, that is our bank, debits the amount of check only after the check is paid. Cashbook is maintained by us. We always maintain the bank balance of cashbook alone. The balance is shown in cashbook on the debit side. Supposing if we receive any checks, it is a deposit for us. So debit on the cashbook. Or Mr. X deposits directly in our bank account. It will also be shown on the debit side of cashbook. And when we issue check, it will be shown on the credit side of the cashbook. Then the balancing figure will be shown on the, that is balance carried on will be shown on credit side of the cashbook. So how we can find the differences? If reason for the differences in cashbook and passbook is not given, we can simply find the differences by taking the cashbook and seeing what and all is debited. So what and all that is debited in cashbook has to be credited in bank passbook. And what and all that is credited in cashbook has to be debited in bank passbook. All inflows come on debit side of cashbook. All outflows come on credit side of cashbook. Bank charges. Bank often charges for the services it renders. These are known as bank charges. If there is an overdraft, the bank will charge interest on bank overdraft. These bank charges are entered in the passbook, but not in the cashbook, simply because the customer is unaware of the charges recorded in the passbook. The customer comes to know only when the passbook is received. The reason for the disagreement could be direct collections by bank. The bank collects interest on securities or investments or dividend on shares. Sometimes it collects even the amounts due on bills of exchange or promissory notes. The bank will credit the customer account as soon as the amounts are received, but the customer again is unaware of the credit made by the banker in our passbook. Bank statement, that is our passbook, which is maintained by the bank. Checks received from Mr. X, that will be shown as the deposits on the credit side in our passbook. And checks given to Mr. ABC will be shown on the debit side of our passbook. That is, withdrawals will be shown on debit side of passbook and deposits will be shown on credit side of passbook. In short, whatever that is debited in cash book will be credited in bank passbook, and whatever that is credited in cash book will be shown on the debit side of the bank passbook. Loan received is the liability for bank. So the customer account is the liability. When the loan is received, bank balance increases, but at the same time, liability of the customer also increases. How to prepare bank reconciliation statement? If reasons for the difference in balance as per cash book and passbook is given, start from the bank balance as per passbook and end up in balance as per cash book. Or start from bank balance as per cash book and end up in bank balance as per passbook. This is the format to prepare bank reconciliation statement. Supposing we are starting from balance as per passbook, then certain items have to be added and deducted. Finally, we will arrive at balance as per cash book. If we start from bank balance as per cash book, certain items have to be added and deducted. Finally, we will arrive at balance as per passbook. Method 2. If reasons are not given, how to prepare bank reconciliation statement? Whatever that is debited in cash book should be credited, and whatever is credited should be debited, or just verify the bank balance of our book with the passbook of bank for bank charges or interest on investment, etc.
Thanks for watching. Please like, share and subscribe.